Lee, it's been 2 years since the financial crisis really dominated the agenda at Sibos in Vienna, and now there are tentative signs of recovery in the financial system. Do you think that the worst is over?
I think it's a hard question, but I would say yes. The reality is that we're not actually on the road to recovery. We're still stuck in that trough trying to get up the curve, and part of the problem is that we've got an environment where we have continuing low interest rates, which are impacting revenues at the banks. We still have a quite dire state in the economy because the economy is waiting for the banking system to recover, which means lending is down. So again, revenues are down. We also have increasing pressure from the regulators. I mean, the Basel III Accord, which if you remember 3 years ago I predicted we would have coming, is going to put more pressure on Tier 1 ratios, but not as much as everybody predicted. And a lot of the national governments, in the UK and the Swiss have been the first to come out with this, have said that they're going to further increase those tier capital ratios, in some cases doubling them. So I think we have a real problem where the banks are looking at less income, although they are profitable again in many cases, and they're looking at having to set aside even more of their working capital to meet these requirements, which is going to continue to keep us, if you like, in this slump for the next couple of years.
Last year, you pointed out that cash management was still one area of the bank that was earnings positive. Do you think this is still the case, or has the focus shifted somewhat?
No, I think cash management still is the area of the bank that's probably consistently delivering revenue. I think the challenge has been is that we haven't had the time to innovate new products in cash management over the last couple of years because of the crisis. So revenues have been going up, but in the same sort of growth that they would have been going up in the past. And actually revenues in other areas of the banks are falling. So as a result, what you have is increasing pressure on cash management to drive more revenue because they're not currently able to meet that shortfall. I think that is the real challenge at the moment, and it's going to continue to be a challenge because, again, due to problems with liquidity in the market, the fact that banks are having to set aside more working capital, cash management is going to have to innovate if they expect to actually drive more revenue to make up for that shortfall. And again, there's so many divestitures currently going on where banks are looking at selling off non-core assets that we're seeing actually chunks of revenue go away as well.
To make up the earnings shortfall, beyond innovation in cash management, are there any other areas where banks can innovate or drive business to help make up that shortfall?
Well, I think the key for 2011 is going to be liquidity and going to be how you have access to it and how you manage it. And really the only way that we're going to change how that works is with analytics. So none of the banks I'm talking to are terribly interested at the moment in big transformation programs. What they're interested in is how we grow our revenue, and the best way to do that is to take analytics and apply it to the information that you already have to get predictive information out. So we need to be able to be more innovative and how we deliver, say, FX to our customers, and how we actually deliver corporate treasury to our customers. Because I think the one thing that's important for banks to all remember is that their corporates are in the same position they are, right? They have the same pressures both from regulatory and cash flow perspectives. And if you can figure out a way to dive into your own data and your own position management and your daily trades and consolidate those to get a single view across the bank of your liquidity throughout the day, who's using that liquidity, and then be able to charge for it, I think that's where the new revenue is going to come from. And I think actually there's a real opportunity here in the next year for a utility across the industry on the same sort of scale as what we currently have, say, with the operational risk exchange, where banks start to share that information anonymously with each other so that they can see trends in terms of counterparty risk against other institutions, currency flows in and out of different jurisdictions, and that way they can understand where their liquidity is being spent and figure out how to apportion that back out.